Okay, Thomas Fried here, and folks, this is huge. This is national news. It's going to be suppressed, and you're not going to hear about it from the mainstream media. So if you want to be free from the federal income tax, you need to share this video and make it go viral. The Supreme Court issued a ruling in June of this year that terminates the IRS's ability to assess the income tax in the manner they've been doing it for the last 65 years, terminates the DOJ's ability to argue in court that you owe the tax because of what they've been arguing for the last 65 years. The income tax is over. It's defeated. The Supreme Court has given us the ruling that we need to tear the IRS apart, destroy the DOJ in court, and expose the fraudulent judicial legislation of the federal judges that have been destroying America the last 65 years by enforcing communism in place of constitutional taxation. The income tax is over. The Supreme Court has killed it. How come nobody knows? Well, it's because the decision they wrote is going to have these consequences as a side effect of the foundational law they declared in settling the case in detail. What case am I talking about? It's Moore et al. v. United States, published in June 20, 2024 this year. And this is a case where the Supreme Court tested the mandatory repatriation tax element of Donald Trump's new tax law enacted in January of 2018. And if you recall, I've been telling you that the enactment of that law terminated the Department of Justice's ability to argue in court because the constitutional authority statement for that new law was declared by Congress on the congressional record to be Article 1, Section 8, Clause 1, which is the authority that allows indirect taxation of transactions and activities by impost, duty, and excise. But it does not allow for the taxation of labor. And it's always been a tax under Article 1, Section 8, Clause 1. The IRS, the DOJ, and the lower federal courts of the district and circuit courts of appeals have unconstitutionally reversed the true Supreme Court holding and have been arguing the wrong thing for 65 years. A tax that doesn't exist under the Constitution is what they've been arguing. You want the proof? Well, here it is, okay? You can zoom in on this and check it out up close and tight. This is the IRS's frivolous document position, and it's the document where the IRS declares that the 16th Amendment authorizes a direct, non-apportioned tax on income. It's a direct tax on income, they say. The 16th Amendment created a direct tax on income. Now, here are the other. You can zoom in on it and read them if you want. These are the case precedents that the IRS cites as supporting their argued opinion, argued belief that the tax is a direct tax under the 16th Amendment without limitation. And this specifically says it's one of the frivolous positions that the IRS has been lying about for 50 years. 6, contention. The 16th Amendment does not authorize a direct, non-apportioned federal income tax on United States citizens. They say that's a frivolous contention, that it does not authorize a direct, non-apportioned tax. They go on. Some assert that the 16th Amendment does not authorize a direct, non-apportioned income tax, and thus U.S. citizens and residents are not subject to federal income tax laws. The law, the constitutionality of the 16th Amendment has invariably been upheld when challenged. Oh, yeah, right, the amendment's in the Constitution. But what does it mean? Don't talk this nonsense. And numerous courts have both implicitly and explicitly recognized that the 16th Amendment authorizes a non-apportioned direct income tax on United States citizens, and that the federal tax laws as applied are valid. And they cite United States v. Collins, which is a 10th Circuit decision. And the courts cited to Brushaber, Union Pacific 2219, where it quotes, 16th Amendment authorizes a direct non-apportioned tax upon United States citizens throughout the nation. Only problem is, that's not what Brushaber said. What Brushaber said is that the tax is an indirect tax under Article 1, Section 8, Clause 1. The lower courts have reversed the Supreme Court decision and have been in rebellion against the Constitution and its limitation on the taxing powers since the late 50s and early 60s, when they began enforcing it as a direct tax on income and started getting these rulings out of the lower courts that literally reversed entirely the Supreme Court decision. So for the last 65 years, and in every civil and criminal tax case today where the government is challenged for the subject matter jurisdiction of the action in the court, the DOJ argues it's a direct tax under the authority of the 16th Amendment. They argue this despite the fact that the word direct is not in the amendment in describing the tax being authorized, and despite the fact that there is no enabling enforcement clause in the amendment to authorize Congress, constitutionally authorize Congress, to write new law to enforce the new power to tax. Because if it's a direct tax without apportionment, that's a new power. And in order for Congress to write law for a new power, they'd need an enabling enforcement clause. And that has to be there in order for a court to take subject matter jurisdiction to enforce anything under alleged authority of the 16th Amendment. Because one of the requirements of subject matter jurisdiction is that the court be able to show Congress was constitutionally authorized to write the law that the government has brought to the court to be enforced. And they haven't. So what did the court do in this Moore decision in June of 2024? First of all, the name of the case is Moore et Ux v. United States. Et Ux is Latin legal terminus for "and his unnamed wife." So Moore and his wife filed a joint return, and on it, they didn't declare the earnings of a company in India that they owned stock in and had ownership, a partial ownership of the company. Somehow, the IRS found out about their ownership in the company, and they assessed a deficiency on the return, the joint return, of $14,000 based on their share of the Indian company's profits, income, which they hadn't declared and paid on their return. Now, Moore took them to court. His wife is there because it's a joint return, but she doesn't really want to participate, I would imagine. So they keep her unnamed, and she's just at Ux, but that includes her in the action if there's a result. So Moore sues, claiming you can't tax unrealized gains. The Indian company had not distributed any of the profits made on its business to American shareholders. So there was no income to the American shareholder. And Moore sued, saying you can't tax unrealized gains. Now, the tax court upheld the claim, the Ninth Court upheld the claim, and it went to the Supreme Court. And the Supreme Court said that because this is a foreign corporate structure, it can be treated like a pass-through, an S-corp, an LLC, which means that all of the earnings, the income that was realized by the Indian company, but wasn't realized by the Moores for lack of a dividend payment or repatriation of the earned funds, the court ruled that because of this foreign corporate structure, it could be treated like a pass-through, an S-corp, an LLC, and that therefore there was a duty by the Moores to report all of the earnings and expenses of the Indian company, their share, their proportionate share of the ownership needed to be reported on their individual return and tax paid on it. And the court basically said you can tax unrealized gains the same way that it works with an S-corp or an LLC. Because this is foreign corporate structure, and I should mention there is a tax treaty with India which opens the door to the government taxing in India where it has no territorial jurisdiction to do so without the treaty. So the Supreme Court told the Moores, no, you're wrong. We can tax unrealized gains because this is foreign corporate ownership structure that's treated like an S-corp or an LLC on a pass-through basis. You should have passed through the unpaid out earnings as your share of the Indian company's profits. They needed to be reported on the return and tax paid on it. So this sounds like really bad news, right? What do you mean they can tax unrealized gains? Well, the court took the time to say that if it had been a domestic company, things would be different. Two justices it was Thomas and Gorsuch dissented. And I think the basis of their dissent as I read it was that, hey, you're just making this up. There's no legislation, there's no provision in the legislation that says these companies will be treated as S-corps or LLCs. You're just making that up to try and get to the tax and uphold it. That's not the way these companies are treated under law, and you can't add to the law what's not there. And the 16th Amendment does indeed require a realized gain by the American shareholder to be taxable, even within this foreign corporate structuring under a treaty. So 7-2, they can tax unrealized gains coming out of a foreign corporate structure ownership. And like I've been telling you all along, it is a foreign tax, and there is a tax treaty here. So I'm not sure. I'd have to go and read the legislation to see whether there was an S-corps pass-through arrangement established for these companies to be treated under. Without that, I think the two dissenters are right. The court's just making it up to uphold the tax. So, how does this case overturn the federal income tax? Well, against that backdrop of upholding the MRT element of Donald Trump's new income tax law, and against the history of the last 65 years where the Department of Justice has been arguing their subject matter jurisdiction in the court is based on a power conferred by the 16th Amendment to tax directly and without apportionment, a non-apportioned direct tax subject to no limitation, because the 16th Amendment authorizes the income tax without regard to apportionment or any census or enumeration. So it may appear to overcome the limitations associated with direct taxation, but it doesn't say it's a direct tax. And if you use the 16th Amendment to infer it is a direct tax without limitation, well, then you've created an unlimited power, which doesn't exist under the Constitution, and you've engineered an inherent, irreconcilable conflict within the Constitution between the 16th Amendment and the unrepealed and unamended provisions of Article 1, Section 2, Clause 3, Article 1, Section 9, Clause 4, which still require all direct taxes to be apportioned to the states and laid in proportion to the census, regardless of the adoption of the 16th Amendment. And this is precisely what the Supreme Court ruled in 1916, but it is also what the circuit courts have reversed over the last 65 years to allow the IRS to assess the tax as a direct tax without limitation on all sources, without regard to any application or subjectivity of any imposed duty or excise taxing power or tax that was actually written into law by Congress. So let's take a look at what the court said in Moore, because they laid it all out, and in order to get to the conclusion in detail, they went through all of the original taxing powers provided by the Constitution. And what did they say? Well, here it is right in the syllabus at the top, which is the overall embracing of what the court did in the decision. We're going to start with it. This is held the MRT, which attributes the realized and undistributed income of an American-controlled foreign corporation to the entity's American shareholders, and then taxes the American shareholders on their portions of that income, does not exceed Congress's constitutional authority. A, Article 1 of the Constitution affords Congress broad power to lay and collect taxes. That power includes direct taxes, those imposed on persons or property, and indirect taxes, those imposed on activities or transactions. Direct taxes must be apportioned among the states according to each state's population, while indirect taxes are permitted without apportionment but must be uniform throughout the United States. Article 8, Section 8, Clause 1, they cite. Taxes on income are indirect taxes. And the 16th Amendment confirms that taxes on income need not be apportioned. Let me read that again. Taxes on income are indirect taxes. Oh, you mean what I've been teaching you for 40 years is correct, and what the government has been arguing in court is flat out fraud? Wrong. It's not a direct tax. It's indirect. Taxes on income are indirect. It's not direct. Every single criminal and civil court case that's been conducted in the United States courts by the Department of Justice for the last 65 years has been a constitutional fraud. 65 years of courts acting without subject matter jurisdiction to enforce the direct tax the IRS has been assessing and arguing and telling you to shut up, sit down, you're our slave. We can take 100% and there's nothing you can do about it because it's direct and unlimited. The lying fucks. 65 years of fraud. Fraud. Constitutional fraud being perpetrated on the American people by the judges. By the judges. And the DOJ. Oh, not enough? You want more? Why don't we read from the opinion of the court, where they really hand it to them, which is what the syllabus is based on. Listen to this. Article 1 of the Constitution affords Congress broad power to lay and collect taxes, duties, imposts, and excises. Article 1, Section 8, Clause 1. That power includes two great classes of taxes, direct taxes and indirect taxes. Citing Bruchaber v. Union Pacific, 240 U.S. 1, the same court decision this all started with, which the circuit courts have reversed. They all cite Bruchaber saying it's direct. Here the Supreme Court cites Bruchaber and says it's indirect. Let's keep reading. Generally speaking, direct taxes are those taxes imposed on persons or property. See National Federation of Independent Business versus Sebelius, 567 U.S. 519, 2012. That's the Obamacare healthcare tax ruling. As a practical matter, however, Congress has rarely enacted direct taxes because the Constitution requires that direct taxes be apportioned among the states. To be apportioned, direct taxes must be imposed in proportion to the census or enumeration. U.S. Constitution, Article 1, Section 9, Clause 4. See also Section 2, Clause 3. The code sections I've been telling you haven't been repealed or amended. Has to be apportioned to the state. All direct taxes have to be apportioned to the states and laid in proportion to the census. Those requirements were never removed. And the court reasserts them here as still being applicable to all direct taxes. In other words, direct taxes must be apportioned among the states according to each state's population. So, if Congress imposed a property tax on every American homeowner, the citizens of a state with 5% of the population would pay 5% of the total property tax, even if the value of their combined property in the state added up to only 3% of the total value of homes in the United States. To pay 5%, the tax rate on the citizens of that state would need to be substantially higher than the tax rate in a neighboring state with the same population, but more valuable homes. To state the obvious, that kind of complicated and political unpalatable result has made direct taxes difficult to enact. Indeed, the parties have cited no apportioned direct taxes in the Internal Revenue Code. And it appears that Congress has not enacted an apportioned tax since the Civil War. Well then, how the hell, if there's no direct tax in the Internal Revenue Code that can identify the Supreme Court, how the hell have they been enforcing it as a direct tax against the American people for 65 years without limitation? Total fraud! When push comes to shove, they can't show the Supreme Court a direct tax in the Internal Revenue Code. They got asked to do it. They couldn't do it. And they didn't want to argue income tax because that would have led to a direct ruling overturning the entire income tax system, which we got anyway. Listen up. Okay, so it says here they haven't done a direct tax since the Civil War. So obviously the law they passed in 1913 wasn't direct because that's after the Civil War, and obviously the new Donald Trump tax law, which replaced the 1913 law, isn't a direct tax. They haven't done one since the Civil War. And when push comes to shove, the Department of Justice can't identify a direct tax. You've been lied to, cheated, and robbed, and enslaved to a debt service system more akin to the peonage plantation of the 11th century than any constitutional taxation by impost, duty, or excise. Let's go on with the opinion, shall we? By contrast, indirect taxes are the familiar federal taxes imposed on activities or transactions. That category of taxes includes duties, imposts, and excise taxes, as well as income taxes. That category, indirect taxes, includes imposts, duties, excises, and income taxes. It's indirect. It's not direct. They've been lying to you, stealing your homes, your property, your lives, your wives, putting you in jail because you won't practice communism. Specifically, the second plank of the Communist Manifesto, which reads a heavy progressive or graduated income tax. That's where you find graduated non-uniform taxation. That's where you find tax brackets. That's where you find the division of the population to create the class warfare that is burning America down. It's all unconstitutional. It all starts with the tax brackets of the income tax. And the tax has been thrown away by the Supreme Court. Under the Constitution, indirect taxes must be uniform throughout the United States. Article 1, Section 8, Clause 1. A tax is uniform when it operates with the same force and effect in every place where the subject of it is found. So they're trying to justify graduated taxation, but they can't. The use of tax brackets date to a series of decisions in the 1880s where courts held that tax brackets were a function of the congressional power to discriminate against the inanimate articles of commerce and commodities subject to the tax, and to discriminate against the inanimate corporate person, and to discriminate against the privileged licensed person and or foreign person. But citizens earn money by right, the exercise of the right to work. They don't earn it as a function of any incorporation or corporate privilege. The corporate person is inherently taxable on all sources. The individual person as a citizen is not, because there's no impost, duty, or excise tax that reaches their right to work. Impost taxes foreign persons and foreign labor, foreign activities, foreign imports, and in foreign places. Duties tax exported goods, and excise tax the manufacture, consumption, and sale of commodities within the country. Licenses to pursue certain activities like selling alcohol, tobacco, and firearms, or petroleum products, commodities controlled and taxed. And excise taxes tax the corporate privilege, where it is the privilege that is the subject of the tax. Incorporation is the privilege that makes the corporate person subject to tax. The license to sell alcohol, tobacco, and firearms is the privilege that makes the individual subject to excise taxation. And you have the manufacture, consumption, and sale of commodities within the country. So if you're not involved in that, don't sell alcohol, tobacco, and firearms, and aren't a corporation, there is no excise that reaches you on income, and there is no impost that reaches you. Impost is that's how it was originally enacted. The Underwood-Simmons Tariff Act of October 3rd, 1913 is the original income tax legislation enacted as an impost, the authority to tax foreign affairs under Article 1, Section 8, Clause 1, and that legislation was identified by the Supreme Court as being a piece of legislation, and the act provides for the collection of the tax at the source. That is, makes it the duty of the corporations, etc., to retain and pay the sum of the tax. They set up a system of tax collection by withholding money as tax from payments made to certain persons. The only persons whose payments were made subject to the collection of the tax were foreigners. That's 1441, 1442, 1443. And then the tax collector is made liable for what he has collected from those foreign persons. That's Section 1461. This is all laid out in the definition of the withholding agent in 7701A16, and it's all fully explained and documented on the taxfreedom.com website. So if you want to get informed, you want to learn the truth, go over to the website and start reading. I've just posted this article which explains why this decision in Moore, declaring that the income tax is an indirect tax, That will prevent any lower court from ever again accepting the argument from the DOJ that it's a direct tax under the 16th Amendment without apportionment. It will terminate the IRS's non-apportioned direct tax assessment processes. You can't assess it as a direct tax, and guess what? Every single case in the federal courts today, civil and criminal, are all based on the IRS's unconstitutional alleged assessment of a direct non-apportioned tax under authority of the 16th Amendment. But since the Supreme Court says it's indirect under Article 1, no court can take subject matter jurisdiction to enforce the claim based on a direct assessment. Every single civil and criminal tax case in the federal courts ends today. Or rather, the minute the defense attorney files a motion to dismiss for lack of subject matter jurisdiction, since they've proceeded under the assumption it's direct, and now the court tells us, no, it's indirect. You've been lied to, deceived, defrauded, robbed, disenfranchised of home, property, salary, jobs, lost wives, and many have committed suicide over the desperation and frustration created by the government's conspiracy to convert the republic to the socialist democracy that the income tax funds through the redistribution of wealth. It's all fraud, it's all unconstitutional, and it's over. If you don't understand this, you need to go to taxfreedom.com. If you're in the courts, civil or criminal, you need to contact me, Tom at IRS Zoom. I can be contacted through irszoom.com, where I have mounted all the documents that anybody will need to answer a letter from the IRS. And now we have all the documents we need to beat them in court, both civil and criminal. Any Title 26 charge, it's all been done under the wrong premise. A bad constitutional foundation that doesn't exist. The court just tells us income taxes are indirect. Direct taxes must be apportioned and laid in proportion. There's no exceptions. Nothing has changed. Oh, you want to read a little more? Sure, we can do that. Because income taxes are indirect taxes, they are permitted under Article 1, Section 8, without apportionment. As this court has said, Article 1, Section 8's grant of taxing power is exhaustive. Well, no, not quite. It doesn't reach labor, does it? And it's not the labor of American citizens conducted by right. It reaches the labor of foreigners. That's Section 1441B. Salaries, wages, and compensation are listed as three distinct separate forms of income, subject to the collection of the tax when earned by a non-resident alien. Section 61 doesn't include salaries and wages. The terms were removed in 1954 when it was recodified from Section 22A in the 39 statutes to Section 61 in the 54 Code. They removed salaries and wages so they wouldn't have a patently unconstitutional statute that tried to tax the citizens' right to work. Especially since the labor unions had passed Title 15, Section 17, had Congress passed Title 15, which declares the labor of a human being is not a commodity or article of commerce. That removes you from subjectivity to excise taxation. That's why they took out salaries and wages from Section 22A when it turned into Section 61 in 1954. And of course, it's probably worth mentioning that Section 22A was not part of the original tax legislation in 1913. It came 5 years later under the Canadian Tax Treaty, a 75-year-long tax treaty with Canada that expired in 1993. Section 61 is dead-letter law. It's had no valid application outside of the expired treaty that it was originally enacted under. When the treaty expired, so did all the laws enacted under it. that since that time had not been reenacted by Congress with any greater or further applicability at law than that provided by the original legislation, a tax treaty with Canada. So if you were in Canada, all those 61 sources of gross income apply to you between 1918 and 1993 when the treaty expired and it was replaced by Bill Clinton with NAFTA. And NAFTA has since expired and been replaced again. So let's keep going here. Okay, they cite exhaustive, meaning that it could never be questioned from the Founding Fathers that it included the power to lay and collect income taxes. Bruce Shaber, 240 U.S. 1. They're citing Bruce Shaber as the authority and saying it's Article 1, Section 8. Well, that's funny. That's not what the lower courts have been saying for 65 years. The lying fucks. In 1861, Congress enacted the nation's first unapportioned income tax, 12 Stat 309. The Civil War income tax was recognized as an indirect tax right from the beginning, under the head of excises, duties, and imposts. Again, Bruce Shaber, 240 U.S. at 15. See also Springer v. United States, 102 U.S. 586, 1881. 1881. Indirect under Article 1, Section 8. In 1895, however, in Pollock v. Farmers Loan and Trust Company, this court held that a tax on income from property equated to a tax on the property itself, and thus was a direct tax that had to be apportioned among the states. 158 U.S. 601, citing Pollock. The Pollock decision sparked significant confusion and controversy throughout the United States. Congress and the states responded to Pollock by approving a new constitutional amendment. Ratified in 1913, the 16th Amendment rejected Pollock's conflation of one, income from property, and two, the property itself. The amendment provides, quote, the Congress shall have power to lay and collect taxes on incomes from whatever source derived, without apportionment amongst the several states and without regard to any census or enumeration, end quote. U.S. Constitution Amendment 16. Therefore, the 16th Amendment expressly confirmed what had been the understanding of the Constitution before Pollock. Taxes on income, including taxes on income from property, are indirect taxes that need not be apportioned. Bruce Shaber, 240 U.S. at 1518. Meanwhile, property taxes remain direct taxes that must be apportioned. See Helvering v. Independent Life Insurance Company, 292 U.S. 371. Okay? Repeatedly, in describing and laying out the constitutional foundation and historical application of the income tax that had been upheld by the Supreme Court, it was always upheld as an indirect tax. Article 1, Section 8, Clause 1. Well, the only thing in Article 1, Section 8 is impost, duty, and excise. They put income tax into that, but not as a separate new power, because that could have only been created by the 16th Amendment. There's no enabling enforcement clause, so there's no authority to write law for a new power. All you can do is use income as a function of taxation by impost, duty, and excise. And the Supreme Court has ruled that the proper function of income is to be used as the yardstick that measures the amount of tax owed on the earnings derived from the activity subject to some federal impost, duty, or excise. If there's no impost, duty, or excise, there's nothing to measure. You don't just tax the yardstick. Income is not the object of the tax. It's not the subject of taxation. It's the yardstick, the mechanism by which the amount of tax owed on the earnings derived from the federally taxable activity or transaction, which is only federally taxable if impost, a foreign tax, a foreign person, a foreign import, a foreign place, like a territory or possession, is involved. Duty is the taxation of exported goods, which we don't have. That's why we have duty-free shops. We don't have any material or resource shortages or good shortages that need to be kept in this country for the American population to have access to. And we don't punish our manufacturers for successfully selling into overseas markets. We encourage that because we have no product or material resource shortages here. So we don't use duties unless we impose them on a country that we're punishing. But we don't use duties. Imposts only apply to foreign activity, foreign persons, foreign imports in foreign places, foreign labor. And excise is commodities, licenses, and corporations. There is no taxation of the American people's labor under Article 1, Section 8, Clause 1. It doesn't constitutionally exist as a granted power. That is why they've had to lie about it being the 16th Amendment. They couldn't argue for a tax on labor under Article 1, Section 8, so they had to lie and say it was a direct tax under the 16th Amendment. That's the only possible path through the Constitution to the taxation of the labor of the American people. And it didn't start with the income tax, it started with the victory tax. In 1942, a 2-year temporary war revenue measure that expired after 2 years because the Constitution says no war revenue measure can last for more than the 2 years of the term of Congress that enacts it. Every single successive Congress has to reenact the funding for a declared war or it ends, because historically, if you stop paying the soldiers, they walked off the front lines and stopped fighting. And the Founding Fathers didn't want one Congress to be able to bind the American people into a 10-year or 20-year or 100 years war. So it has to be refunded every 2 years. So the victory tax started in 1942. That was the first time federal taxation touched the labors of the American people. The first time in history. And they got away with it by deceiving the American people into believing it was their patriotic duty to sacrifice a portion of their earnings to help defeat the Nazis in the European theater and the Imperial Japanese in the Pacific theater. And they did it in 2 years. And then Congress, seeing that the American people had bought into the patriotic duty argument, and no one had protested or sued over the unconstitutional application of a non-existent taxing power to tax the labors of the American people directly to fund the war. Totally unconstitutional, and nobody objected. So at the end of the war, Congress looked around and said, holy shit, nobody sued. Nobody sued. We just paid off all the war debt in 2 years. 95% of it's gone. Europe just got done paying off their war debt 10 years ago. In 2014, they made their last payment to the United States. That's how long America thought they were going to be paying off the debt, but instead they did it by the end of World War II through the victory tax. And Congress looked around and said, oh my God, we can't let this power die. So they reenacted the current employment tax laws, Subtitle C, that set up a system that persuades by propaganda the American person to ask for withholding to which he is not subject to. The W-4 is an allowance certificate. You're giving your employer permission to collect tax from you that isn't owed. It's not imposed on your right to work, but once you allow them to withhold it, you create the presumption and appearance of subjectivity, and you spend the rest of your life enslaved to that presumptive appearance. Because none of the money goes in the Treasury. None of the money withheld from your paycheck goes in the Treasury. None of the money sent in on April 15 with Form 1040 tax returns goes in the Treasury. It all illegally goes around the Treasury. I say illegally because there is a law, Title 26, Section 7809, that says every penny collected as tax must be deposited in the Treasury on a daily basis. Now, regulations modify that cycle to weekly, biweekly, monthly, or quarterly, and most employers send in their withheld escrow taxes on a quarterly basis. But what that means is that on January 10th, all the tax taken from your pay should have been recorded at the Treasury as tax paid, because that code section that requires the deposit also requires a receipt be created, a certification statement showing the amount and name and account number the tax paid is to be credited to. That's you and your Social Security number, name and account to which the tax will be credited. So on January 10th, all the money sent in by your employer should have been paid into the Treasury and credited to your name and account by law. But everybody knows if you don't file on April 15th, they say you haven't paid any tax. No money went to the Treasury. There's no money recorded at the Treasury. Well, how is that possible? Your employer sent it to the Treasury. How come it didn't end up there? And where did it go? You want to know where it goes? It goes to the same place that your check goes on April 15th. Now, you'll never get access to your employer's deposit receipts, but it's obviously not going in the Treasury. Otherwise, you wouldn't have to file. The tax would have already been paid in the amount withheld from you. You'd only have to file to get a refund, not to pay tax, because they collected it, and all collected taxes have to go in the Treasury. But they aren't going there. How do you find out where it's really going? Well, what do you do if you want to know what's going on? Do you listen to what they say? Do you follow their instructions? Or do you follow the money? I follow the money to find out what's going on. Now, how do you follow the money with a check that you wrote? Do you look at the front of it to see who you wrote it to? Or do you look at the back of it to see who cashed it and endorsed it? So, why don't you get the last check you sent to the IRS from your bank, ask for both sides, front and back, turn it over and see if it says deposit to the U.S. Treasury, which is what it will say if it was tax. That's not what it says. I'll bet you $100,000 that's not what it says. You know what it does say? Pay to any FRB, Federal Reserve Bank, a private corporation. Why is a private corporation cashing your tax check instead of the U.S. Treasury deposit required? How does Congress spend tax money that's at the Federal Reserve Bank and not in the Treasury? It can't. And the consequences of this, when a hurricane or earthquake occurs and Congress needs money to give to FEMA to go help the disaster area, they rush over to the Treasury to try and draw on the revenues that have been accumulating there. Oh, none have been accumulating. There's no money there. There's no tax there. It's all at the Federal Reserve Bank. So what does Congress have to do to appropriate $1 billion or so to give to the disaster-stricken area? That's right, borrow another $1 trillion from the Federal Reserve bankers who are preventing them from drawing on the Treasury revenues of the so-called tax, which is not tax. It's no law imposed. They didn't impose any new law in 1945. Unlike the victory tax, they didn't put a new tax in place. They just put in place a system where you ask for the withholding on a W-4, an employee's withholding allowance certificate. That's not allowance as in we're giving you $1.50 every week to feed the dog and walk the cat, or walk the cat and feed the dog, or walk the dog and feed the cat. It's allowances in your permission to collect from me tax that isn't imposed, that I don't owe, that I'm not liable for because I'm not the collector. And once you create that presumption, you spend the rest of your life servicing the $36 trillion in debt owed by Congress unconstitutionally to the bankers who never put a dime of their own money in. They didn't have $36 trillion alone. They buy $100 bills for 4 cents apiece. Come on, America, wake the fuck up. You're being robbed, cheated, and deceived by your own government under a peonage system from the 11th century peonage plantation, where all the little peons and serfs are given a little plot of land, i.e. your job, that they're allowed to work at all year long, but come harvest time, the master comes around and tells them how much of their annual produce they're going to have to turn over to the master so that he can pay his court, his whores, his gamblers, his munition suppliers, and, of course, service the debt he owes to his king. And in our analogy, you, the American people, are the peons working the plantation, which is the United States of America. The overseers are the companies. The master on the hill is Congress on Capitol Hill. And the king being serviced, collecting all the debt service from the overseers and the master on the hill is the Federal Reserve Bank who run the country. When Joe Biden speaks, people laugh at him. When the Federal Reserve Chairman speaks, the whole world tunes in to see what's going to happen next. Because they know the bank is running the country, not the president. And it's never been more evident than the last 4 years. So if you want your country back, if you want your freedom back, you want your paycheck back, you want your rights back, you want your property back, you want your housing back, you want your Constitution back, you want your constitutional republic back, you better wake up and get over to this website and start reading so that you understand the IRS can't proceed with the assessment of direct taxes anymore. The DOJ can't proceed in court without subject matter jurisdiction to enforce the direct tax they claim was created. It's a fraud, and the Supreme Court has shot it down. The Supreme Court has shot it down. No federal court can proceed 1 minute more when challenged to establish jurisdiction under Article 1 and destroys the claim that they can enforce the assessment made as a direct tax under alleged authority of the 16th Amendment. No authority, no such authority ever existed. No claim is owed, no tax exists. This is why for 100 years, both of the rumors that it's voluntary and there is no law have both survived, despite the courts telling us it's not voluntary and there is a law. How do both rumors survive in the face of 2,000 pages of code and the existence of the amendment in the Constitution? Well, it's indirect, not direct. But the way it starts is if you tell me you claim that your authority to tax my income is based in the 16th Amendment, well, then as a student of the Constitution, I know for a fact, a constitutional fact, it has to be voluntary because Congress isn't authorized by an enabling enforcement clause to write any new law under the 16th Amendment. So if you claim it's the 16th Amendment that I owe, which they've been doing, it has to be voluntary. And the court says it doesn't exist. It's not the 16th Amendment. They were lying. Total frauds, total cheats, seditionists, communists, pushing their philosophical beliefs to grab raw power and usurp authority that doesn't exist and make expenditures that aren't authorized. And the other myth, there is no law. Well, that's true if you start with Article 1, Section 8 as your claimed authority for the tax. Because all there is in Article 1, Section 8 is impost, duty, and excise. There is no law that reaches labor with legal effect as a tax, not the labor of the American people. The only labors taxed are those of the non-resident alien under Section 1441B, where salaries, wages, and compensation are three separate source items of potential income, taxable income to be had the tax collected from by withholding. And notice that in Section 61, they take out salaries and wages, but leave in compensation. Can a corporation earn salaries and wages? No, only individuals. Can a corporation earn compensation? Yes. So was the intent in 61 to tax the corporate compensation that is privileged and taxable by excise, but to not tax the right to work of the citizen through the earning of salaries and wages, which are taxable to the non-resident alien, but are not taxable to the citizen because those source items were specifically removed. They were part of the law when it was 22A in the Canadian Tax Treaty. After World War II, the government decided to put in place this system of withholding by allowance, and they intended to start using Section 61 to deceive the courts and the American people about what's taxable and what's not. They've shifted the whole focus of the tax enforcement to Section 61 instead of impost, duty, and excise. But the source items in Section 61 only are taxable if they're derived from an activity subject to impost, duty, or excise taxation. It's not a direct tax that taxes all sources. It only taxes impost, duty, and excise, indirectly taxable sources. And the Supreme Court in this Moore v. United States decision, 22-800, decided June 20th, 2024, frees the American people from the federal income tax. It's irrefutable. And the only thing I don't understand is how it's possible that I'm the only person in the country that understands the ramifications and consequences of this Moore decision. Everybody else is looking at oh my God, they can tax unrealized gains, mandatory repatriation. No, the ruling is Article 1, Section 8. Income taxes are indirect under Article 1, Section 8. They always have been. And the IRS, the DOJ, and the judicial traitors are dead. Dead. They should be arrested, tried for treason, and shot right after the trial. They are all guilty as sin. And if you want to defeat the IRS in court, if you want to defeat the IRS administratively, IRSZoom.com. If you want to defeat the DOJ in court, taxfreedom.com and IRSZoom.com to get what you need to do that.